Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Hi there, welcome to the COB on this Monday afternoon, the final day of this financial year, the 30th of June. I'm Nadine Blaney, and it is a pleasure, as always, to be here with you. So let's take a look at how this market looks to be finishing. So the CIBO Australia Index, when I was on air just after 10 o'clock, was really lagging behind what was going on with the S&P ASX 200, and it still is to a large degree. So that's an interesting factor today. But the S&P ASX 200 has had a really strong day, thank you very much, up by about 0.5%. And there wasn't a lot of big economic data out today. We did have some private sector credit data at 11:30, but really what we're keeping our eye on is just a little bit of confidence building around the state of the markets in general. After we did see U.S. markets finish on a high, we had U.S. futures climbing right from the get-go. So it looks as if we are on track for a sixth straight half-yearly rise. So that's as geopolitical and trade tensions ease, and as well as we continue to hold out hopes for further cuts coming from the RBA. Could happen a week from now by all estimations. So quite a lot of chatter today as well about the commodity outlook. It's something that I touched upon with my guests on the call today, Francesco Destratus from Ord Minnett and Andrew Coleman from Team Invest, because the government put out some revised forecasts around exports of our key commodities, at least the minerals and metals that we do ship overseas, looks as if they are going to be pulling back. We also, though, had a bit of trade talk optimism coming through, particularly in the relation to the US and China, and as well, we have recently seen that the Canadian Prime Minister, Mark Carney, has rescinded the digital tax that it had proposed. So it stepped back from that to help advance trade talks between the US and Canada. So they will be resuming. So look, there was plenty to discuss today with a whole range of expert guests. It reminds me that I had a great conversation this morning with Greg Taylor from Salter Brothers about what the next key catalyst could be for small cap stocks. You might want to go online to ausbiz.com.au to check out that interview and, plenty of the interviews that we did today to help you on your investment journey. All right, as far as sectors today, let's check it out. So yes, the bit of trepidation being seen in the BHP, Rio Tinto, and Fortescue share price. Fortescue, interesting, that was up on the call today. And Team Invest, Andrew Coleman, shocked me with his call for Fortescue. So you might want to go have a listen to that podcast if that's what you like, or you can watch it online at ausbiz.com.au. And just a PS as well, our latest edition of the Investment Committee will be coming up after this program, or if you're listening to us after the fact or watching after the fact, it will be up on the website, ausbiz.com.au, shortly after that. So the miners were a drag. Tech looked pretty good. Zero the exception to the rule, perhaps because of that big M&A that was announced last week. But tech, I would say, followed the lead that we saw coming through from the United States. The A-REITs as well, looking fairly positive, with Goodman Group up by 1.4%. Again, interest rate expectations often drive that sector, although not a firm narrative going right across the board, as you can see, with Vicinity Centre and Stockland down by about 0.8%. Brickworks today upgraded its guidance, and that sent its shares higher for its earnings guidance. Of course, Brickworks will be merging with Washington H. Soul Patts. James Hardie looking very good, up by 6%. The AZEK shareholders approved that $8.75 billion takeover deal. Drone Shield signed a new $9.7 million Latin American contract. So likely seeing a bit of profit taking after its biggest ever contract was inked last week. And Electro-Optic Systems, still in the defense space, says that market conditions remain strong. Shares were up by close to 5%. And IB Holdings shares did well as well, up by close to 9%. UBS has upgraded the company to buy and lifted its price target. Had a bit of a change at the guard at the board of Paladin Energy. They've appointed a Canadian. They wanted to get some Canadian exposure there as it expands its operations. Dalrymple Bay Infrastructure has also guided to a 24.5-cent dividend this year. Now, the stock of the day today on the call was Superloop. Shares absolutely rocketing after it upgraded its guidance. Let's get some analysis on that one. Again, my guests were Andrew Coleman from Team Invest and Francesco Distratus from Ord Minnett.
Management's discipline has been very good, particularly on the cost restraint side of things rather than cost cutting. I think they've been very restrained in their approach to costs. It does trade on a fairly high multiple, but it is a small cap and it's growing at a reasonable rate. But I think, and as you can see from that intraday chart that was up before, the market obviously pushed it a lot higher, but softened a bit because I think there's a fair bit of that growth built into the share price.
If they make a profit this year, it will be the first time in 10 years. So I'm congratulations to management for finally doing that, but a 10-year track record of managing to connect shareholders to capital raisings rather than profit doesn't enthuse me. Overall, I think the space they're in general is a very competitive space, and it's one where the moats, the competitive advantages will be very limited. Selling effectively broadband and connected services is not a new thing where there are large moats and there's limited competitors.
Look, there was plenty of emotion when it came to share price appreciation on the stock market today. In the small cap space, I think a special mention goes to SciDev. Best day in nearly 3 years on contract wins, and I believe they were on Europe. And we had Tetherix, it IPO'd today and jumped by 15%, and we continue to see the banks rallying as well. So lots happening out there to make sense of it all. Josh Gilbert from eToro joins the COB now. It's a Monday. Nice to see you again, Josh. So what is your take on the equity market performance today? Pretty solid, up by 0.5%.
Yeah, great to be with you, Nadine. It was a surprising week, I think, right? If we think back to probably the conversation we had here a week ago, markets were sort of, I think, clouded by a bit of uncertainty. Investors were sort of weighing on that sort of fallout from rising geopolitical tensions. But I think markets sort of stuck true to form as they have done in 2025. That sort of sense of calm has prevailed, confidence sort of bred through markets, and we saw both US indexes finishing at record highs, and that has obviously sort of led into the AZEK 200 today as well. So I think, look, plenty of positivity. We've seen huge flows into sort of US equities over the sort of the last year as well. And I think for now, I think the market, the market is basically taking a lot of this uncertainty into its stride, as I say, as it has done. And I think is maybe sort of looking past some of the big challenges that we do have ahead, right? Because I think there are some big tests. We've got Q2 earnings seasons kicking off within the next sort of week or so. AZEK reporting season just sort of around the corner, and then obviously the sort of Trump's tariff ends in 10 days, that sort of pause that we had. So I think there's a big layer of uncertainty that is going to be pulled back over the next sort of month or so. And I'm not sure markets right now are maybe pricing in what we can expect to see from Trump over the next 2 weeks.
Well, I feel like we've repeated ourselves many times, that the markets are not necessarily doing what you think they might do when there's so much uncertainty. Is that investor calm, looking through the noise, the chaos at times, or is it some sort of dangerous complacency?
I certainly think we're seeing, retail investors particularly become, more, I think, used to this sort of type of volatility, right? And I certainly think we're going to see it pick up over the next week. If we think back to, where we were back in April, the VIX obviously soaring to, I think it was 50 or 52 around that sort of time, and now we're sort of sat close to around about 16. So that's a big gap and a big difference in terms of what we've seen over markets. I do think that there is a level of confidence, and obviously, what we've seen from data coming out of the US, a very surprisingly resilient economy over in the US. Maybe likely to get a rate cut coming through from the Fed in September, which is maybe better than some had expected. But I certainly do think that there is a level of complacency, right? And I do think that that may come to the fold over the next sort of 2 weeks, especially with I think what we might get from Trump, right? I think he's not maybe delivered what he promised, and I think that when we saw that sort of taco trade coming through, he doesn't react well to those types of things. So I think that when that sort of tariff conversation comes back around in the next couple of weeks, I think we'll see volatility pick up again, and it will be ultimately whether Trump decides to go hard or if he decides to go soft, and I think that will be the direction of markets over the next 2 weeks.
Yeah. What are you expecting? What do you think is going to be the big headline generator from the upcoming quarterly reporting season in the US? I mean, clearly, we're going to be looking for any reaction to the tariff situation, any impact on inflation, any slowdown in consumer sentiment. But will it be that sort of guidance?
Yeah, look, I think, to be honest, if we look at earnings growth, it's set to be pretty tepid in the second quarter, about 2.8%. That's going to be the slowest growth in sort of 2 years. So I think that is going to sort of maybe bring into focus those record highs that we've achieved, and obviously valuations into the spotlight as well, right? Especially with that growth expectation. So I think a lot will come down to how companies are obviously handling tariffs. We had Nike, which is a pretty early read on what to expect from maybe the consumer. Pretty poor numbers all in all, but it was better than expected. So maybe that's an early read on what we can expect from a tariff perspective. They've had a pretty poor time of it as of late, so we could maybe see that as a bit of a relief rally. But I think the big focus will be, it comes around to tech. Tech was a key driver in, I think, helping push this market higher in Q1 earnings season, after we had a lot of volatility coming, in that first quarter of the year, with tariffs and et cetera coming through in April. So that did a lot, I think, for markets to be able to bring back a new level of confidence. But of course, those Q1 earnings, aren't really a great insight as to what we would have expected from tariffs so far. So I think plenty of conversation around that. We'll certainly be looking at margins, and of course, forecasts are going to be heavily in focus. But I think tech is going to be the one that we need to look to, especially from a valuation perspective. If growth doesn't quite meet expectations, then I think that we could see a bit of a correction coming into place.
Yeah, and we'll be watching, obviously, any commentary around AI and second-order beneficiaries of AI. And we have U.S. non-farm payrolls on the economic front to round out this week. But do you think locally, investors might also be feeling a little bit better knowing that there is a interest rate cut, if not next week, shortly thereafter, likely?
Yeah, I think that inflation number that we got last week probably, I think maybe, writes it on the wall, I think, for the RBA, to be honest. I think that, they'll have a tough job explaining why they didn't cut rates, I think, given that number that we had came through. Again, we know they like to wait for that sort of quarterly number, so maybe it's a case of, sitting and waiting for that. But I think they probably got, what they wanted out of that monthly number. So if they do wait, then again, it will be down to probably most likely that quarterly number. But I think we had enough in that, print last week to sort of show that, that there's room for them to be able to cut rates, right? It was much lower than obviously expected. We had some declines in some sort of really key areas in that. We also do have sort of retail sales coming up this week as well, which again probably isn't going to twist the dial too much, but I do think that will obviously be another data point that the RBA look to. Those jobs data in the US as well will be pretty important from a perspective of just sort of global markets and global sentiment as well. But look, I do think that we're going to get a cut from the RBA, and I think it probably makes sense after the data that we've had over the last couple of months.
Got it. Josh, always good to get a wrap of I guess the day and what we can expect in the weeks to come with you. And yeah, really looking forward to this quarterly earnings season in the States. So hopefully we can tap into your expertise then.
Thanks, Nadine. Sure will. Take care.
Josh Gilbert there joining us from eToro. Well, moving right along, let's take a look at some of the market leaders today. We already mentioned NIB Holdings with that broker upgrade, James Hardie, as well with that shareholder approval of that big U.S. acquisition that did anger a lot of local shareholders, and we'll see the end, I believe, to the listing here in Australia eventually. Macquarie Group, it came up on the call as well, up by 3.7%. No news there. but perhaps a reflection of the improved sentiment around the traps. We did see Asian markets rising, particularly as we saw more progress being made on the trade front, this time between the US and Canada. Flipping the page, and Deep Yellow Industries giving up close to 5%. Nickel Industries as well, one of the worst performers, along with Liontown. Liontown is getting a new chief operating officer, although I dare say that's not really behind the driver of the share price. Lynas and Pilbara, what you will notice is that all of those laggards by percentage change on the 200 are in the commodities space. Let's take a look at small cap leaders. Motorcycle Industries up by 22%, Terramin up by 11%, and some of the laggards in the small to mid cap space here locally. Again, resources. It's a pretty clear theme coming through. All right, what do we have coming up overnight? Well, we do have a Chicago PMI read. So looking forward to that. We also get some Fed speak, always of interest when we come in the morning. So this is Bostic and Gouldsby. So we'll look out for that. And also, we are looking to hear from ECB President Christine Lagarde. So for that Chicago PMI, we are expected to see it rise. And what's not on that list is the Dallas Fed's Manufacturing Index, which again is expected to rise as well. Tomorrow here locally, we get the Home Value Index for June from Ality, so really looking forward to that. We're expecting to see house prices continue to advance by about 0.6%. So yeah, that march of Australian property prices continues to go higher because of course we've got a lot more first home buyers coming into the market now, so we are told. Look, we had a little bit of selling. Remember I was saying that the S&P ASX 200 was outpacing what we saw in the COB Australia Index. Well, by the end of the day, total mirror images of each other. So the S&P ASX 200 up by 0.33%, sitting at 8,542. We did see Bitcoin gaining as well, up by about 0.75%, with US futures still looking pretty solid for S&P 500 and NASDAQ E-minis, both up by about 0.5%, so adding to last week's record gains. The Aussie dollar is sitting at 65.4 versus the greenback. I was just checking if there was any breaking news coming out of Europe, but really the focus is on that cooling of trade tensions between Canada and the United States, with Canada backing down on its tech tax. That is the day on markets. Thanks for joining us for the COB. We look forward to seeing you tomorrow morning. We are live from 9:45.